Welcome to IQ Forex. Today our topic is Elliot wave pattern, and why I name this to chapter number 1, that what is the basic of Elliot wave theory, because it's compulsory. It's so important. We have so much chapters, it's a big theory, and it's so much lengthy to understand, and it will take your hours and hours and hours. So I break them into the basic. So that is our today chapter number 1, and then after we make more further videos on it for chapter number 2, 3 and 4 and 5. So the basic chapter number 1 will introduce you that what is Elliott wave pattern and how we determine and how we identify it in the charts in running markets. So first of all, we have to talk over that on what type of basic Elliott waves are, and what type of waves, and how we identify them, and if we identify them, so how we name them, because Elliott wave theory we have to name a wave. When we see a wave like this, let's suppose that in a market I see a bearish candle. It's a newsy candle. It breaks out from a market, it break out and then go down, and we see, so we can identify it's like we have no future, and even I will say you that we have no past here. We just see currently a market goes down and then stop here and then retraces back, and then you see it stops here, maybe a resistance, basically a support of previous past market comes as a resistance, and market then goes down again, boom. Then we see that market stops on a support, and then after it market goes like this, little up and then again down, then up, and then after it we see that market again stop at a resistance point, and then another news come and market goes like this again, boom, down. Today if we talk on basic on this thing, I know that I will identify you every part, every moment in other chapters, but if in this chapter number 1 I need that you guys focus on it, that what I'm saying. Basically this bar is called a wave, and this retracement is also called a wave. So we have two names of waves. First one is we have impulsive. My writing is not good, so please, I'm sorry for this. First wave is we have impulsive, number 1, and then number 2 wave we have is corrective wave. Now we have two waves in all Elliott wave pattern theory. There is not another wave name. There are only two names. That is, one is impulsive and the other one will be corrective, which gives you a impulse and then you see a correction part. And you can say, and you can name it a retracement, that a candle comes down and then retrace back. So we will say that the candle comes down, so it's first wave, and then the correction. Now Elliott wave pattern depends upon number of the waves, and there are the most likely good, I will say, a pattern which is so popular. So that's why Elliott wave is so popular, and that is the 1 2 3 4 5 pattern. Now we see that 1 2 3 4 5, what are these, and then we will also talk on A, B and C. Okay, now what we have here, what we have here, let talk over it. Okay, now let me change my color into black so you will easily understand. We say that market goes down according to a news of like FOMC, or you can say it NFP. We see that market from this resistance line goes to a support and then retrace back and then goes another candle down, and then we see a zigzag pattern here. We can also say it a zigzag pattern here. It's only a wave with single length. Now we are in shuffle. We are so shuffled that what's going on here, because we have no future here, we have no future here, and evenly we have past here, but I am saying that we have no past here. We are in this criteria. So if we have basic rules, if we have some rules here, so we can easily find out that what is this. According to Elliot wave pattern theory, Elliot waves, the impulsive waves are basically depends on wave number 1. We can name it wave number 3 and we can name it wave number 5. Because according to this theory, if this wave is your number 1 wave, it's your number 1 wave, so the correction wave will be your second number. So we name it correction part as a 2. So that means if the next wave is another impulsive and we name it 3, so this correction part is called 4. So according to rule, the impulsives are basically depends on 1, 3 and 5. This is our rule. And correctives are basically 2 and 4. I know that you have in your mind so many questions and you are watching my video, but please do not interrupt your questions in this basic video, because this is the basic video. So in this basic video we only talk on basics. I know that we have impulsive wave like 1, 2, 3, 4, 5. So there are so many waves I seen in charts in the past that are 1, 2, 3, 4, 5, 6, 7, 8, 9. So those are the rare cases. Do not complicate your trading. Take it so easy and so simple. Do not go in your future because you have no future. It's of course, but do not go in your past. Just take the part which is the current part and wherever you are, then you have rules and follow your rules. You will easily find out that where is the another way. Now we name them 1, 2, 3, 4, 5. Now the question is, why we don't name them A, B, C? What are these A, B, C? Because rule number 1 is that impulse wave will be 1, 3 and 5 and the correction wave will be 2 and 4. But what inside this correction? I'm so sorry that this thing is so disturbing me today, but sometime no problem, I will manage it. Okay now. So in corrective part we have A, B and C. So we have impulsive have 1, 3, 5 name and the correction have 2, 4 name and also ABC. Now I will show you in this chart that how I easily show you that where is the ABC. Now look at that we know that after in this theory, if you learn on the other YouTube and other videos which are on the net right now. So they have so much data in it, but the problem is to define. Sometimes you see a whole soul 3 hour video but you didn't understand because Elliott wave is so typical topic and is so tough. So I will making this video to make you easy to easier to understand. Now at this current part we name them that this is our 1, 2, oh, 4. So much difficult. Now in this part we have 1, 2, 3, 4 and 5. Now if I talk over this correction part, we see that this wave goes like this and this and this. And this is a sharp, you see, this is so sharp movement to up. So this is basically sharp movement. After another drop, we see that market takes so much time and makes a whole day movement, and this is your whole day, and you see that market goes up, down and up. So we will name it for correction, but we know, if we know that the correction part is ABC, so in 2 wave we have ABC. This is I'm telling you so much in the easy way. And in 4 we have also A, B and C. Now this is the rule. The rule is that 2, 4 have A, B, C in it. A, B, C in it. Just we have to do that, we have to give them names according to the waves. Now we see this is sharp and this is not sharp, but this is so vice versa, or you can say is like consolidation. It's not consolidation, well, it's like vice versa or sideways. So from 3 to 4 you see a zigzag pattern. So in this correction part you see this is your A, this is your B. Just you have to do, just name them, and this is C. So this is your correction, and inside this sharp you see A, you see a B and you see a C over here. It's logical. Now we have a question again. Then if we have in second correction ABC, there are waves in the waves. So if we have from third to fourth wave, there are waves in the waves. So why don't we have wave in 1, 3 and 5? So my answer is yes, of course we have 5 waves in impulsive, because these waves are called impulsive. So if we think that this is 1, 2, 3, 4, 5, so definitely in this candle you also see a part of 1, 2, 3, 4 and 5. So you will name them in a Roman words, like Roman numbers 1 like this. Then in Roman you give them name like this 2, like this 3, like this 4. It's so typical to define. I'm not the professional in this, but and this is our 5. So the main point which I am trying to describe you is that this is an impulse wave, right? This is our first impulse wave which gives our retracement of second correction. But in this first wave there are waves in the waves. So the waves in the impulsive waves are not will be ABC. This is the rule. The rule is that there will be more 1, 2, 3, 4, 5 in a first impulsive. Then you see a third one, right? Now this third one, if I take another color and I will describe you, this goes like this and this and this and this again. So you see another 1 2 3 4 5. So you will name them just according to this style, right? And after all, you also name them in this style 1 2 3 4 5. You understand it? But if we didn't see this future, we only here. So how we will find it? How we will find it? Let me make it more easy and clear. Now, point number one, how we identify these patterns. Now, my way is I always find the correction part in a chart. In a chart, I always find that where is my A, B, C. When I find these, I also find that where are we going now. If they are moving like this, A, B and C in upward direction, that means that our trend, bigger trend is down. Our bigger trend is down, and because I know the rule is ABC always come in correction parts in the market. So this is rule that ABC always come in correction market. So my way is I first open the market, I first open the chart, then I look into the chart and I find only three waves, that is ABC. When I confirm them, how I confirm them? I will confirm them that now the second part is, this is my first part. Now the second part is waves in the waves. I will find them that it's truly waves in the waves. I will find myself that which I'm expecting this part is truly a correction or not. So I will take another more depth and I will see, yes, there is a wave like this. We have micro waves in it and the wave is, yes, it's like A, B and C. So see that how I giving the names on the wave. So I will better understand that this is my major trend and this is my major correction part of ABC, that is also called a zigzag. This is called zigzag, and zigzag patterns called corrective patterns, right? Now in this B part, I mean A to B, the bigger capital A and capital B, there must be a zigzag also in it. And I will name it, yes, I have another ABC here. I have another ABC here. And then on the B to C wave, I also see that, yes, another zigzag here. So I will name them also A, B and C. Now I determine and I confirmed it that, yes, I am on a true part and my expectations are true that I am on a correction part. Now the question is, if I don't know the past or I have no good judgments, I have only working on these rules, like first number one, you have to find out ABC zigzag pattern or a correction part, and confirmation number two is waves in the waves. When you see these waves, when you see this setup, then you are okay that we are 100% on a correction part, right? So the question is that what type of this correction part? Is it number 2 or is it number 4? Now I don't know, but I know that this is a correction part. Okay, fine. Maybe it's number 2, but I will find in the past, that there will be a wave like this, this, and then this connecting here. in past I will check that where is the impulsive. In impulsive wave, I know that the rule is in impulsive wave there are 5 waves. You see the wave number 1 in correction, this is wave number 1 and wave number 2 and wave number 3. So if we are not naming them ABC, we can name them 3 waves. I'm sorry. We can name them 3 waves. If we don't taking the name of A, B and C, we can name them that 1, 2 and 3. But it will disrupt us because we have so much formats. We can also name them in different style. So the basically, as we understand, the rule number 1 is basically what I will find. I will find in a chart, I will find a correction part, that where is the correction part, so I will easily understand what's going on the other side, on future part, right? So we have 2 parts here. We have one part is our present part, like this is our future, this is our present, right? And this is our past. In past, I see that market gives me a impulsive wave like this, right? Okay. In presently, I see that I find a zigzag pattern, right? And in future, I expect that now I will see another impulsive wave. Why? These are the most important part. But we have to focus that what I am trying to say right now, that please understand this pattern, that we have to understand that why I go to the correction part. Why I go to the correction part. Are you getting my point? Because from correction part you will easily understand, easily you can identify that from the past you are coming from an impulse wave and now you are on right now on a correction phase. So that means the future is another impulse wave. Either is it third wave, or maybe the future one will be fifth. Either it's a first wave and you are riding on the future on a third wave. It's another story. It's another story. We are not getting in it because we are is topic our topic right now is Elliott wave pattern basics. So we will just talk on it and we will remind it again and again and again in our mind, that impulsive waves are depend upon 1, 3, 5, not 2 and 4, because 2 and 4 are the corrective parts. These are found in 2 and 4 correction waves are corrective, and the 1, 3, 5 are found in impulsive, right? They found in impulsive waves, or we can name them as impulsive, right? Now let me take you to a real story, so it will easily describe you each and every part. Now we are here on our chart. It's daily chart, and second thing of basic, the number 2 question on chart, I will also describe you that we understand. Okay, now Aman, we got that impulsive waves are 1, 3, 5, right? And the correction will be 2 and 4, right? And then again impulsive will be 1, 2, 3, 4, 5, right? And the again correction will be ABC, because you tell us that the impulse of wave will carry 5 waves in it, right? And the correction will take 3 waves in it, right? So We don't know where are we. But right now, after C with this another 1, 2, 3, 4, 5 here, and on correction we will take 1, 2, 3 here. Now this will be our fifth. Now let's see in a chart. If I find in a chart, let me take it easy for you so you can easily find out in a chart. Now let us find where are the zigzag patterns, or I can say corrective part, right? For easy to understand and for our less time for the video, so I manage it before the video and I make just trend lines on them, so easily we will understand this. Okay, now let's suppose this portion is our past portion. In past we see, I don't know this is impulse, this is correction, or what's going on. It's all mess. Leave it. All just I know that I am in, this is my present, right? This is my present and I have to judge it, that where I am right now, and this is my past. So in past I make it easy, I simple trace a trend line here to judge the market of high and low. This is my low point, this is my high point. Now I'm not getting in it that what is this? Is this 1? No. Is this 3? No. Is this 5? Who cares? I don't care of this. I don't need it. I just need to understand what is it in present. Now come over here. In present, I grip this area. I see that from this low point, market goes up directly here. I don't care there is a support or resistance. I just see that market goes up here, right? And then I see that market goes down and then again up, and then market change the pattern. That means I got the corrective part. Oh yes, I'm in now. I'm in now. Now I know what is my future. Exactly. Okay, now if I think that I am on a corrective part, so I know that I overruled ABC pattern here, right? I have a ABC. Now just I click in the past, I see, okay, we have a downtrend, market coming down, so it's a big impulse wave. So maybe it's 1, maybe it's 3, or maybe it's 5, I don't know. But if it's 1, then I see that 2. So now this is our third wave. But who cares that this is third? Because if you get into the second chapter of this video and Elliot waves, you will better understand that how to determine these things easily through the way of a tool which is Fibonacci retracement. And according to Fibonacci retracement, we easily judge that what type of wave is it and how much it is retracing. So what will be the next wave? So it will be more easier and more easier on the other chapters. But today my topic is only basics. So I will talk only on basics. We have many patterns. We have like if we see in real chart, if I see that I control a corrective part, right? Okay, now let's talk over that future. After that, I see that market gives me an impulse wave, right? So this impulse will be so good for me because when I see this, that market gives an impulse and then a correction, then another third impulse, then a correction, and then a fifth wave, and done. That means that I'm riding on an impulsive wave. True? Because this is your correction part. Maybe 2, maybe 4. Right? Or maybe B. We can also say it B. Because if this is A and this is B, so it will be C. So right now I'm in a impulsive wave. Okay, now impulsive wave, let's see, this is an impulse wave. We know there are waves in the waves. There are waves in the waves, right? So if you see that this is our first wave, correction, third, fourth, fifth. So now the time of after this is A, B, C. You see A, B, and then C. This will happens exactly after a impulsive wave. Just like it, you see an impulsive wave come here, and then you see a zigzag here, because this is your correction. So it must be done in this way, according to rules. According to rules. Now, let me clear you more clearly in a very nice way. How we name ABC, right? How we name ABC. Let's look only this part. I want to take so much close this because I need you to understand that why I get into it and why I find only the corrective parts in the market. So I will easily understand them, that what is the future. See guys, you see a bigger part of a wave 1. So if we consider this through this is our A, right? After this market comes down here, this is our B, right? And after that market goes more up, so this is our C. Okay, now we are in the true way. Now how I confirm this setup? So our rule number 2 is the wave in the waves, right? Now from here to here part, you see this. So that means market goes up and then retrace back and goes up. So what you find here? You find another wave of A, B and C, which is giving you the clue or evidence that the next wave will be go down, and just according to ABC, like this, this and this. It is true? Now this is your A wave, this is your B wave, and this is your small C wave. After this you see another market jump up, down and then up. So what that means? That means another A, B and C. So all over judgment we see the wave in the waves, we also get the 1, 2, 3. And in a major part we also see that this major part is also ABC. It's also wave A, B and C. And we know according to Elliot waves, when we find A, B, C along together, so it will called a correction part. And correction part always be built on the number of correction part on the number of, it will be 4 or it will be 2. Okay, now why I say B part? Now this is our another topic right now. Now we understand the ABC exactly, clearly. So we are heading to our next topic of B, right? Okay, now let me delete it. After a correction part, I see and I expect that market will go more further down, right? So it's very typical to do these things in a video because I'm not professional in video. So okay, fair. Now we see a impulsive wave here, that blue line, it's an impulse. Now we are counting it, right? We are counting it like this is the low, right? This is the low. So market rate is up to this low. Then market goes down, right? This. And then you see it goes up again and then down. Now, why I said it's an impulse. According to rule, first let me name them. This is our A, this is our B, and this is our C. According to rule, if this is 1, this is 2, this is 3, this is 4, this is 5. Now, here now, the next part which I am talking about, it's so expensive part. Because, why? Because there is a rule that the correction of 2 part and the correction of 4 part, this correction of 4 part will not be overlapped to the 2 part right here. So it will be not valid. You are not on impulse. Because after a correction of 2 part, the 4th will be down, but not exceeding so much up like a second touch, or exceeding more up to overlap the 2. This is the main important part of rule. Rule is that the correction of 4, will not overlap correction of 2 area. 4 will not overlap to 2 correction. It's the rule. So if it goes up, then this all setup will be not valid. Your judgment is not good and you are doing a wrong thing. That will give you a punishment, and punishment is equals to what? Loss of money. So I find in the market, when I open my computer and I see a zigzag, I see, yes, it's a correction part. Let's suppose I will name it 2. We are here on 2. Okay? And this is my ABC. I confirm it. I confirm them. Now I am on a impulsive wave. That is 3. That is 3 part. And I see the first part, waves in the waves of a impulsive big wave is completed. And I see that in the wave, I see that 1, 2, 3, and 4, and 5 is done yet. So it's good, but how I expect that how much retraced or the correction part will go up in the market? Now this is the another question. So according to Fibonacci retracement, I will easily find out the future. How? Just we have the Fibonacci rule that when we see a downtrend, so we retrace our Fibonacci tool, we trace it from down to up, right? But in this way, for seeking your future, you have to trace it from up to down. And up to down, you have to also mention those numbers and write them on your paper or whatever you have, that note down these numbers. These numbers are so important in Elliott wave. These numbers. Normally you see so many numbers, but I am only focusing on them. So you will add them on your Fibonacci also. Now these three numbers are called the extensions. These are extensions, right? And these, let me finish this mess. This is your extension number, this is your extension number, this is your extension number, right? And this is your 100 number, everybody knows it on Fibonacci retracement. And this is your 0, where the market start, right? Now what I'm watching for the future? Question. I am watching that I see a correction, then I see a impulse. Now on the current market I'm watching the correction, and I'm watching how much this ABC correction will go more up, right? I also see that 1 2 3 4 5 happens. Now currently I am on a zigzag. So why this candle comes down on Friday? Question is this. If I am on a zigzag, why? It's basically, it's a trick. It's a trick of waves in the waves. If you see this is your wave in the wave. So many people discard that you tell us that this is our correction. You tell us that we are on a correction part. But now where this come from? Because you are not understanding Elliot right now. You are just copy paste or whatever I say that because my English is not so strong, so sometime I will stuck, my mind also stuck to explain it. So many problems in my conversation, but I will try my best to be the best. So it's another story. I will talk also this in this chapter according to its future. But let me tell you about the Fibonacci retracement. So I'm telling you that these are the extension numbers. These are the future seeking numbers. And what are these? These are our golden ratio from 0.618 to 0.382. This is our golden ratio, which also impacts the market in a momentum change. If market comes down, it will go up, and if market going up, it will comes down, because these three values, these three levels change the reactions, right? But if you know the Elliott wave theory, you will be never shuffle in the market that what's going on. You will just see, yes, it's on correction 2, so we are going to correction number, we are going to impulsive wave 3, and then yes, we are on 4, now 5 is coming. So you will automatically run yourself like 1 hour more fast from the current market. So it depends upon the practice also. So you have to practice all these things. Don't take my video so much in your mind. I'm just making this video only for the explanations. So after the explanations, when your mind getting it, so you will take more videos on YouTube, and the other more mentors are on the internet that those are explaining more better than me, Elliott waves. But this is my style to explain. I will try to explain my group and my fellows. So so guys, where are we? We are on the extension, right? And I also explain you the golden ratios. Now when I see this is my high, this is my low. I place a Fibonacci retracement here, and I see that market first go to this, and this is our 0.382, right? But to be very frankly, it's not a good ratio that it's over. No, it's not over, because at least the rule is that market will go 0.618 at least up in the way of zigzag, right? If you see in past, it will also explain you. It will go 0.618 max. But if you finding A and B, let me talk over it also. If we're finding A and then B and then C, so the B will be max retrace, like this is Fibonacci 0 to 100, right? So we are seeking the future of B, so we will see it maximum 6.18 or maximum to 78.6. Let it do with Fibonacci, so it will also explain you more deeper, because now I am coming to the end of the parts, which are the basic parts. First, the name, how you name the waves. Secondly, what are the corrective, what are the impulsives. Third, how many impulsive they are, how many corrective they are. Fourth, that if we are in ABC, then what are the waves in the waves. There are more ABC in it, right? So fifth, we see according to Fibonacci. So now let me please allow me to finish this setup first. So I will remove the Fibonacci, right? Okay, now we are here, right? We are here and we see let me take Fibonacci. Now from uptrend market we will trace Fibonacci from down to up, right? But I'm taking it from up to down like this. So I will fix this in my chart for seeking what? For seeking what, guys? Use your mind, so it will answer you that for what Aman says. Let me explain you. I take this part and this part only. You see this? Are you getting me in the video? This is my low, this is my high, right? So I will taking the future part. Future part is what? Extensions. I will taking the extensions. But how? When I am here, I will see that market comes down maximum to this level. So this is the golden ratio of 0.5, not the 0.618 and not the 0.38. I will not saying that it's minimum, I will not say it's maximum, but it's balance. It gives you a balanced correction of ABC. First ABC is big, then the correction of ABC is small. And how much? You see it from 0.5. Now where is the next ABC will go? Next ABC part, the rule says in ABC you will see 113%. And if it's aggressive in a volatility, then it will be maximum to 1.272. But I will see this in ABC. In ABC, I see them in such rare cases. But only 113 gives you the best result. Market will turn from there. Market will turn from there. Now we see this wave of A, we see the B, right? Now after a B, how we check that C? So we see the main part of advanced information of our extensions, right? Through our through our B part. Now let me take this part of Fibonacci up to down, right? But I will take it from up to down, up to down, whole correction part. This is my whole correction part, right? So I will see the next ABC, and after ABC, where will be the wave 1 end? Wave 1 will be end on, you see that when I see this whole part of correction for the future seeking of another impulsive, where will be the wave 1 end of the microwaves? So I will see that it ends on 0.236, right? But seriously, this is not the way. This is not the way. The way is, when you see the future, you have to move your Fibonacci not according to the rule. You have to reverse it. How? Let me define you. We take 0 to 100 from down to up, right? We take it from down to up. Now let me delete it, and then we will take it from up to down. Oh, my mouse is not working. My mouse is not working. It's so tough to. Okay, now from down to up, like this. Right? From down to up like this, you see that we have this part. We are here, right? We are here. We are here. Now we are watching where will be our wave 1 end. So be reminded, after a ABC, there will be the impulse 1 again, maybe up. If you see ABC like this, then it will be impulse up, and if you see waves like this on uptrend, then the next impulse will become for downtrend, to be continued to the Elliot wave theory, right? So here we are taking this action. Now how much it retraces? You see on Fibonacci it retraces not over the 0.78, but it retraces 76%, let's say. So it's average, but it's not average, it's a true part. It's a true part, because for a long momentum journey, it's the first correction and it goes well to the 0.382. But this is not my way to judge this. I will judge this in my own way with this, that first I take this part. Okay, now I see a confirmation candle of a dragonfly here. You see there is a dragonfly, which confirms us that trend is changed now, right? And after these dodges always tell you in the market that where are you. It's very simple. This doji also tells you that market is going currently down or up, right? Okay, now let's see. This is our, okay, now after this wave of first impulse, I am taking the short of this correction part, which I don't know in the future, right? How I check it? Sometimes I also forgot that how to trace from up to or down. Sometimes it happens with me. Okay guys, but it's not visible clear, so I am taking it to a safe point where we easily detect. Now this is one exactly on it, right? Okay, Now we take this Fibonacci retracement and we see that market goes directly to 50% again. You see this? It goes to 50% again. Let me make a question in our mind. Why not it goes to 0.886? Question is, if it goes to 0.886, it will be not valid a impulsive wave, because 0.886 always happens in A, B and C. Okay, 113 will always happens in A, B and C. Okay, I will show you how. Now you see this, that market comes just retrace, so this is your 2 part, right? This is your 1 part, right? This is your first, this is your second. Okay, now let's move further quickly to the next part. Quickly to the next part. Next part is now we are taking our third wave, which ends here, which ends here from here. This will be, this is our third wave, right? Okay, now after the correction, when market moves more down, now listen, I say you that waves in the waves, but if you politely see that there are so much waves in the waves, also waves in the waves. You see this? You see this, guys? And in the correction part you will see the zig and zag, right? In this correction part you also see this zig and zag. This is called ABC. This is called ABC, right? This is your 1, 2, 3, 4 and 5, and after that you see again, again A, B and C. Now you get my point, what I am saying, that in a impulse wave there are more waves in the waves, so you have to be fine in the practice, right? Okay, now we see that we check the third wave, right? We check this part only, the third wave, sahi hai? Only for the fourth, so we see that the fourth comes. Now this is another rule which I tell you, a trick or another rule, but you note it down. Note that, always note that when you see a correction like sharp in second wave, so you always see the correction of 4 will be vice versa, sideways, holding bullish belt, but not sharp. If the correction of 2 is 50%, right, then it's rule that the fourth will be also not 50%, it will be 61.8 or exceed. These are the things of practice. When you see in the practice, you will note that it's really when you see a sharp correction of 2, you will see a fourth will be lazy, time spending, time wasting. And then you see like if you see on Thursday time wasting, on Friday it's fifth wave, like this. Understand? Okay, now so our third part always our third part is also be okay, and we find it that yes, it's done. We see that third wave, the correction goes more to basically 0.618, right? Now from the beginning of this correction, how I see, oh sorry, in this correction, how I will see that it goes up, how I see the future. Now this is the question. Turn all these things off, so we talk now on the future. Now remove it, and now we talk over the future. Okay, now I see this, that market comes down, so now I am taking the retracement part of my ABC, how much it will goes, right? How much it will goes. So I am taking this like this, okay. If you see how much market comes up after this wave, after this ABC, the first you see we touch only 0.38, so it's not completed yet, right? When we see it touch 0.618, but brothers, this is C part. C part always gives you the length of the first, and then you see the length of this, so it will be the length of this. Basically it will be maximum to 0.618, right? Then you see another one come, 1 2 3 4 5. It's another case, it's a future case, because it's basically a wave after correction, a wave. If you see this, a wave correction after a wave, like if we name them, this is your, let's suppose it's third wave, and this is your fourth correction, right? And this is your fifth wave starts now. So in the waves, you will be see another wave here. You will see another wave here, right? Okay. Sometime people says that on my group or other chattings that Aman, you are saying that it's C wave, right? But basically we are not going down, we are going up. So I told them, buddy, yes, you are telling me straight away, it's true, but in my side I see why. Because Fibonacci tells me everything. When I see Fibonacci here to here, from here to here, what area we cover till yet? Simple. We only cover the extension of 1.113. See this. And this candle you will say it like whatever, but it's a turning point. Number one. Now let me take it to the other story in my reversing style. Let me delete it. Sorry, I did it again wrong. So let me delete it like I also take this part, right? But let me take this part to this part, like this. Sorry, I'm on different way. I will find out on my correction where are the extensions, like this, from high to low, and we see that we are on 1.113. But let we take this part from here to here. So where is my C? Now C part always goes maximum, maximum. Don't go to the extensions like 1.27 to 1.618, but it will go maximum in my idea to 88.6, which is near about, I think, 1.174 number, right? So this will be your C, but not in the style of this. It will be the style of this, right? Or maybe it will go to 0.618, so it depends upon the market. Always remember what my trading style is. My trading style is not like this, that I only depend according to the parameters. No, I know if I am right here, let me tell you this. If I am right here, right, and I see that market gives me this touch, right? So now I know that the major wave of A is done. I am on a B. So B must goes up. Is it true? So I will take a little buy here. And then after that I know that it will not go exceed up. So I have to take a sell, right? But seriously, very frankly, trading in the correction part is difficult. For the new beginners, only the impulse area will give you profit. Let's suppose you take a sell here, and you see market goes away from you, and you will come, your 100 balance comes into 80, right? But trend is your friend. It will also, in some days you see it will going to your direction down and down and down. But the other part is the fear part. When you see after a long wait, it's a psychological effect. When a trader see this, like a new beginner, he cuts here, he cuts his trade here and take only $2, and yes, I win, I'm safe. But basically the training or the learnings or the study of these things will need practice and also experience of some years. After some experience, you will never cut here, because when you know that which wave are you floating, so you know the future next wave, so you never cut it here. You will cut it, you will take the each part of it. You will never cut it here. You will cut it here or maybe here according to Fibonacci, but you will never cut it here. So this is the basic trading style. Well, today video is so long, and I will try my best to expose everything in a deeper way, in a different style, not in just like other professional style, because they are professional. I'm a student, I'm just a learner. So I'm just telling you that from this style, if you see that where we are right now, see this, you see this, we started from here, and after a zigzag we are going down here. Maybe it's one, maybe it's not one, it's three, or maybe it's not three. But how is possible that if it's a wave A and it's a B which is not meeting the rules, it's overlapping here, so it's not going C like this, right? So are you getting my point? If you are understanding the Elliot wave rules, so you will know that yes, this is impulse 1, this correction second done, now third, right? Okay, now let we see also this part in Fibonacci retracement. How much it retrace up? 0.382, right? 0.382. So after this it will max retrace to 0.236 and then it goes more or down, right? So this is the way. Now the another thing, yum 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 yum. What is this? Where are we now? Okay, now another way of detecting the future extension, which I tell you to use the correction part. So you will see the future extension. Now where is the important number of the next wave? That is 1.618, and sometime in rare cases it depends upon the volatility, it goes to 2.618. I see it many times, but 1.618 only. So you see that it's here, but it's not like this. When the wave start going down, it will hit first again to 1.13, then you will see it hits 1.272 and then it hits to 1.618. So this will be tell you that this is your wave 1, this is your wave 2, and then you are on wave 3, right? And then wait, oh sorry, I'm so sorry, I disturbed in all of this. Like this is your wave 1, right? And this is 2 and this is 3, and after 3, if a correction comes from here, always reminded that it will not overlap this second, it will comes over to like maximum to 0.382 level according to FIBO, and then it will go. Now this is basically just like a shark, so it will goes not like this, maybe it will goes like this in the 33.6 angle degree, right? So maybe sideways bullish belt, but and then it goes more again down, more down for the number of 1.11, which is then you will see down 1.08, and then you will see 1.05, and the end, tata bye bye. So it's end, and I hope you will understand that all of these setups I tell with logics, with some rules, because I know this is so lengthy part. If I make some notes and you want this video more perfect and good, like if I make notes in advance and then I show you chatak chatak that this is this, this is this, so it's YouTube material, but I'm not sharing any YouTube material, I'm just sharing what I understand about Elliot wave. So I'm sharing my data with you guys. So it have some experience in it, it have some Fibonacci numbers. So I'm telling all these things, and from other next chapter 2 will give you more important things, which are let me say waves in the waves. You understand that what is waves in the waves. Now the other part is what are the triangle ABC, what are the diagonals, what are the descending and ascendings. So these are more perfect major parts are upcoming on the next video of Elliot wave chapter number 2. So thank you so much for this and for today. So I hope that you understand, and inshallah on chapter 2 we meet again. Thank you very much.